Hey there, dividend hunters. Iggy the Investing Iguana here. Want to supercharge your passive income this June? Well, you're in luck. I've got the inside scoop on 5 Singapore stocks set to dish out some juicy dividends. In this video, we'll dive into these companies, explore why they're worth watching, and see how they can help you reach your financial goals faster. Strap in, because this dividend train is about to leave the station. First up on our list of Singapore companies dishing out dividends this June is Riverstone Holdings, a leading manufacturer of cleanroom and healthcare gloves. Established way back in 1991, Riverstone has grown over the years to become a global supplier, with state-of-the-art manufacturing facilities spread across Malaysia, Thailand, and China. Now, here's the exciting part. Riverstone just reported some seriously impressive financial results for the first quarter of 2024. We're talking a 4.8% increase in revenue and a whopping 54.5% surge in net profit compared to the same period last year. That's the kind of growth that makes investors sit up and take notice, but wait, there's more. Not only did Riverstone's profits soar, but they also generated a healthy positive free cash flow of $44.8 million. This means the company has plenty of cash on hand to invest in future growth opportunities, or perhaps even reward shareholders with some extra dividends down the line. Speaking of dividends, here's the juiciest bit of news. Riverstone is set to pay out an interim dividend of $0.04 per share on June 7th. With a current dividend yield of around 4.5%, which is higher than the market average, Riverstone is definitely a stock worth watching for income investors. It's worth noting that Riverstone has a solid track record of increasing its dividend payments over the past decade. This shows the company's commitment to sharing its success with shareholders and instills confidence in its future prospects. Next up, we have NetLink NBN Trust, the company behind Singapore's nationwide broadband network. In their latest financial results for the year ended March 31, 2024, NetLink reported a 1.9% increase in revenue to 411.3 million Singapore dollars. This was driven by higher residential connection revenue as the number of fiber connections continued to grow, with residential connections exceeding 1.5 million and non-residential connections rising by 2.7% year-on-year to 53,500. However, net profit for the year dipped slightly by 5.5% to 103.2 million Singapore dollars. This was attributed to a one-off, non-cash write-off of decommissioned assets, partially offset by a 5.2 million Singapore dollar refund related to the resolution of disputed power charges. Excluding this one-off expense, NetLink's FY 2024 EBITDA and net profit would have been within expectations, at around 98% of full-year forecasts. Despite the slight decline in net profit, NetLink still managed to increase their distribution per unit, DPU, by 1.1% to 0.053 Singapore dollars for the year. Unit holders can look forward to receiving this payout on June 12, 2024. NetLink has a track record of consistent dividend payouts, having distributed dividends to unit holders every year since its listing in 2017. Over the past few years, the company has maintained a stable DPU, with a slight upward trend. In the previous financial year ended March 31, 2023, NetLink had paid out a total DPU of 0.0527 Singapore dollars, comprising distributions of 0.0265 Singapore dollars in December 2022 and 0.0262 Singapore dollars in June 2023. Looking ahead, analysts forecast NetLink's dividend yield to remain attractive at around 6.6% over the next 3 years. This positions the company as a solid income-generating investment for those seeking stable and predictable returns. With its extensive fiber network infrastructure and the growing demand for high-speed internet connectivity, NetLink is well-positioned to continue delivering steady returns to its unit holders. However, investors should also be aware of potential regulatory changes that could impact the company's pricing and profitability in the future. Overall, NetLink NBN Trust remains a defensive, high-yielding investment option for income-seeking investors in the Singapore market. Singapore Technologies Engineering, or STE, has been making waves in the global technology and engineering space with its impressive financial performance. In the first quarter of 2024, the company reported a remarkable 18% year-on-year revenue growth, showcasing its strong market position and ability to capitalize on opportunities across various sectors. This growth was driven by contributions from all three of its business segments: commercial aerospace, defense and AMP, public security, and urban solutions and AMP, SATCOM. But STE's success doesn't stop there. The company also secured an astounding 3 billion Singapore dollars in new contracts during the same quarter, further bolstering its already robust order book. With these new wins, STE's order book now stands at an impressive 27.7 billion Singapore dollars, providing a solid foundation for future growth and stability. This is a testament to the company's competitive edge, innovative solutions, and trusted reputation among its global customer base. As a result of its strong financial performance and bright prospects, STE has announced plans to reward its shareholders with an interim dividend of 4 cents per share. This dividend will be paid out on June 5, 2024, giving investors yet another reason to be excited about the company's future. The dividend payout reflects STE's commitment to creating value for its shareholders and sharing its success with them. Looking ahead, STE is well positioned to continue its growth trajectory. The company's diverse portfolio spans across the aerospace, smart city, defense, and public security sectors, allowing it to tap into a wide range of opportunities. With its cutting-edge technologies, engineering expertise, and global presence, STE is poised to play a leading role in shaping the future of these industries. Fraser and Neave, the renowned food and beverage company behind beloved brands like Magnolia and 100+, recently announced its impressive financial results for the first half of fiscal year 2024. The company's revenue experienced a modest 2.5% increase, while its net profit soared by an astonishing 52.4% compared to the same period in the previous year. This remarkable growth and profitability can be attributed to the company's strong performance in its core food and beverage divisions across Malaysia and Thailand, as well as improved cost efficiencies and favorable foreign exchange translations. In Malaysia, Fraser and Neave's food and beverage division recorded an 11.3% increase in revenue during the second quarter, reaching RM787.7 million. This growth was primarily driven by robust sales during the Chinese New Year and an earlier Hari Raya sales period. The division's operating profit also saw a significant increase, rising from RM48.2 million in the previous year to RM92.9 million in the current quarter. This improvement was due to higher revenue, margin improvements, and savings in manufacturing overheads and logistic costs, despite the challenges posed by escalating input costs for certain commodities such as sugar, rice, gelatin, and cocoa powder. Similarly, the company's food and beverage division in Thailand delivered a positive performance, with revenue growing by 13.2%, 10.4% in constant currency, to reach RM563.8 million. This growth was mainly driven by successful loyalty programs, higher exports to Indochina and other countries, and favorable currency translations. The division's operating profit also increased by 49.7% to RM116.8 million, supported by higher sales volume, favorable input costs, and lower freight and distribution costs. Despite the overall strong performance, Fraser and Neave's publishing and printing segment experienced a 14% decline in revenue to $96.5 million, due to reduced printing orders and the closure of unprofitable business units. However, this did not significantly impact the company's overall financial results. In light of the company's strong performance, the board of directors declared an interim dividend of 30 cents per share, an increase from the previous year's 27 cents per share. This dividend, amounting to approximately RM110.0 million, will be paid to shareholders on May 31, 2024. Additionally, Fraser and Neave is investing in a new dairy manufacturing facility in Cambodia, demonstrating its commitment to regional expansion and growth. Last but not least, let's take a closer look at Frasers Logistics and Commercial Trust, FLCT, a Singapore-listed real estate investment trust that has been making waves in the commercial and industrial property space. With a diverse portfolio of 112 properties spanning across Australia, Germany, Singapore, the United Kingdom, and the Netherlands, FLCT has built up an impressive asset base worth approximately 6.8 billion Singapore dollars. In the first half of fiscal year 2024, FLCT delivered a solid performance, with revenue rising by 3.9% year-on-year to reach 216 million Singapore dollars. This growth was fueled by a combination of positive rent reversions, rental escalations, and contributions from newly completed properties. While net profit did experience a slight dip of 5.5% year-on-year to 103.2 million Singapore dollars, this was largely due to a one-off, non-cash write-off of decommissioned assets. On the bright side, this was partially offset by a refund for the resolution of disputed power charges. Despite the minor profit decline, FLCT still managed to deliver a healthy distribution per unit, DPU, of 5.3 Singapore cents for the first half of fiscal year 2024, marking a 1.1% increase from the previous year. This is a testament to the Trust's ability to generate stable and growing returns for its unit holders. Additionally, FLCT maintained a high portfolio occupancy rate of 96% with a weighted average lease expiry of 4.3 years, providing visibility and stability to its rental income. There you have it, folks, 5 Singapore stocks to watch for delightful dividends this June. Riverstone Holdings, NetLink NBN Trust, Singapore Technologies Engineering, Fraser and AMP, Neave, and Frasers Logistics and AMP, Commercial Trust. Each one is poised to put some extra cash in your pocket. Remember, investing in dividend stocks can be a smart way to generate passive income and build long-term wealth. But as always, do your own research and consider your unique financial situation before making any moves. If you found this video helpful, give it a big thumbs up and share it with your fellow dividend seekers. And if you want more juicy investing insights, smash that subscribe button to join the Investing Iguana community. I'll be back with more tips and tricks to help you navigate the wild world of finance. Until next time, this is Iggy signing off. Happy investing, and may your dividends be bountiful.